Vietnamese Dong surges to $4.78. Is the Iraqi Dinar RV next? With your channel intro for RV news, written in paragraph format without headings. Welcome back to RV News, your trusted source for the latest updates, insider intel, and breaking developments in the world of currency reevaluations, global financial resets, and high-stakes monetary changes that could transform lives overnight. If you've been following our journey, you already know we've been keeping a close eye on the Vietnamese Dong, the Iraqi Dinar, and all the signals from banks, governments, and international financial bodies. But today, what we have to share is nothing short of shocking. Multiple reliable sources, both within the banking sector and currency trading communities, are now confirming that the Vietnamese Dong has been spotted at an exchange rate of $4.78. A figure that, just months ago, would have sounded like pure fantasy. This sudden surge has sent shockwaves across the revaluation community, and it has everyone asking one burning question. If the Dong is moving, is the Iraqi Dinar next? The number itself, $4.78 per Dong, needs to be understood in context. For years, the Dong has been artificially suppressed, kept far below what many economists argue is its true market value. This suppression was the result of decades of war, sanctions, and deliberate monetary policy meant to encourage exports while stabilizing the economy. Yet beneath that surface, Vietnam's economic growth has been explosive, driven by manufacturing, exports, foreign investment, and strategic trade alliances, especially with the United States and other major economies. When you couple that growth with the quiet buildup of gold reserves, increased bilateral trade agreements, and Vietnam's integration into global banking systems like SWIFT and soon ISO 20022, the writing has been on the wall for some time. But still, $4.78 is a monumental leap, signaling not just a revaluation, but potentially a coordinated move in the global currency landscape. Bank insiders have been whispering about this for weeks, but now the whispers are turning into confirmed sightings. Traders are reporting that certain Tier 1 banks have updated their internal forex screens with this new rate, though it's not yet reflected for public retail exchanges. This is exactly how these reevaluations typically roll out, first in internal systems, then selectively in specific markets, and finally to the public once the necessary clearances and liquidity provisions are in place. The $4.78 figure appears to be an activated rate for specific institutional clients, possibly part of a controlled rollout or test phase. It's also possible that this is part of a parallel or contract rate program available only to those holding certain agreements or redemption appointments. This development has naturally set off a wave of speculation about the Iraqi Dinar. The Dong and the Dinar have often been mentioned in the same breath among revaluation watchers because of their similar histories. Both were devalued due to war and sanctions. Both are resource-rich nations with rapidly improving economies. And both have been quietly rebuilding their banking infrastructure in line with global financial standards. The fact that the Dong appears to have revalued first is not necessarily a surprise. Vietnam has had fewer political hurdles to clear than Iraq, which is still wrestling with political reforms, corruption crackdowns, and finalizing its economic stabilization measures. But make no mistake, if the Dong is moving, it may be the trigger or green light for the Dinar to follow. Several contacts in the Middle East have reported unusual activity in Iraqi banking circles over the past 72 hours. Branches of major banks in Baghdad have allegedly received new currency stockpiles, both in IQD and USD, suggesting they are preparing for a surge in demand or a shift in rates. The Central Bank of Iraq has also been holding extended closed-door meetings with representatives from the International Monetary Fund, IMF, and the Bank for International Settlements, BIS. The official statements remain vague, speaking only about currency stability measures and harmonizing with regional partners. But seasoned watchers know these are often code phrases for imminent policy shifts. One of the most interesting aspects of the Dong's move is how closely it aligns with the rumored timelines for the Global Currency Reset, GCR, and the revaluation of multiple currencies. For years, the idea has been floated that certain first basket currencies would go together in a coordinated release. Vietnam and Iraq have been consistently listed among those first basket currencies, along with the Zimbabwe dollar and a few others. If Vietnam truly has gone live at $4.78, it could mean that we are in the early phases of that basket rollout. It's possible that Vietnam was chosen to go first because its economy is more straightforward to stabilize and because the geopolitical risks are lower compared to Iraq. However, it's important to address a critical point. Why would the rate show internally but not yet be available to the general public? The answer lies in how reevaluations are managed to prevent market chaos. If a currency jumps from fractions of a cent to several dollars overnight without a controlled rollout, it could trigger massive arbitrage plays, liquidity shortages, and even political backlash from nations unprepared to handle the shock. By introducing the rate internally to specific institutions, central banks can monitor market reactions, ensure liquidity is sufficient, and slowly expand availability. This also allows for prearranged contracts, such as those held by Tier 4B, the much-discussed group of private redeemers, to be honored before the general public exchanges. So, where does this leave the Iraqi dinar? The most recent credible reports suggest that the dinar's new rate when it goes live could be anywhere from $3.20 to over $6, depending on whether one is accessing the street rate, a market rate, or a negotiated contract rate. Iraq's oil reserves, natural gas potential, and recent moves to secure foreign investment all support a strong valuation. Add to that the fact that Iraq has been diversifying away from a dependency on USD transactions and increasing its gold reserves, and you have the conditions for a major upward move. In other words, the foundation is there. It's simply a matter of timing. Some analysts believe that the Dong surge may have been used as a test case to measure the market's response and smooth out any operational hiccups before the dinar follows. If this theory holds, then we may see the Iraqi dinar revaluation within days or weeks rather than months. Others caution that Iraq's internal politics, especially ongoing debates over revenue sharing between Baghdad and the Kurdish region, could delay the final rollout. Still, the general consensus among insiders is that the two events are closely linked, adding fuel to the speculation. There have been unconfirmed but persistent reports that redemption centers in the United States have been put on high alert. These centers, set up to process large currency exchanges quickly and securely, are said to be staffed and ready with NDAs, non-disclosure agreements, printed and prepared. Several sources claim that select individuals have already been called in for Dong exchanges at the new rate under strict confidentiality. If true, this means the system is not only live internally, but operational for those in the right channels. This also aligns with certain geopolitical realities. The global financial system is undergoing a shift toward asset-backed currencies, and both the Dong and the dinar are poised to benefit from this. Vietnam's economic strength comes from manufacturing, exports, and growing trade alliances, while Iraq's is rooted in vast oil and mineral wealth. Both nations have the potential to support high currency valuations, if those valuations are tied to tangible assets rather than just fiat promises. The push toward gold-backed or asset-backed monetary systems, especially among BRICS nations, adds further pressure for these currencies to be adjusted to fair market value. The reaction from the global markets to the Dong's reported surge has been mixed but intriguing. While major news outlets have been quiet, likely to avoid sparking a speculative frenzy, currency traders, alternative financial media, and revaluation watchers have been buzzing with activity. Social media platforms are lit up with screenshots, testimonials, and even alleged bank statements showing the new rate. Skeptics, of course, are pointing out that until the rate is available on public forex markets, caution is warranted. But the sheer volume of consistent reports across multiple regions suggests that this is more than just a rumor. From a technical perspective, the Dong's rise to $4.78 could have several implications for the broader economy. For one, it would make Vietnamese exports more expensive, potentially slowing down trade in the short term. However, the increased purchasing power of the Dong would make imports cheaper, improve the living standards of Vietnamese citizens, and attract foreign investment. This shift could also encourage Vietnam to position itself as a more significant regional financial hub, leveraging its stronger currency to build economic influence. For those holding Dong or Dinar, the big question is strategy. If you're sitting on a substantial amount of either currency, the decision of when and how to exchange could be life-changing. The possibility of tiered rates, contract rates, and special redemption programs means that rushing to the nearest bank at the first sign of a public rate change might not be the best move. Carefully reviewing options, consulting trusted advisors, and understanding the fine print of any exchange agreement